Hi guys, and welcome to our webinar. This is CLIQ company. My name is Olga, and today we are going to talk about Gartley patterns. Actually, we are going to talk about harmony in the market. We are going to talk about the harmonic patterns, which were first described by Harold Gartley in his book Profits of the Stock Market in 1939. It was long ago, but still, a lot of traders are using these instruments in their trading because actually the patterns work perfectly in the market. And one of the big advantages of this pattern is that actually they can be found in any markets, including Forex. And trading these harmonic patterns is based on the principle that the repetitive patterns make it possible to predict the following the future price movement. And the closer the pattern to its standard or classical proportion, the better the chance, the higher the chance of its execution or liberation in the markets. The big advantage of these patterns that they can be found at any time frame, even on at a 1 and monthly time frame. And of course, it's better to trade the patterns which are close to the standard proportions. But the market gives us, it's not ideal, market is never ideal actually. It never works like books, like it's written in the books. That's why it gives us patterns with the difference from the classical ones. And today we're going to talk about the most popular from the Gartley patterns list, the following patterns: the pattern of butterfly, of crab, and bat. And first we will start from the harmonic pattern butterfly. The butterfly is based on the Fibonacci ratios. Actually, all the patterns are based on the Fibonacci ratios. So today we're going to talk a lot of numbers or Fibonacci retracements, Fibonacci levels. So be very attentive, please. And by the way, if something is not clear, you can always ask a question, leave your comment in the section comments. I will answer you during our webinar. Don't be shy, we appreciate your feedback, always. Okay, let's continue. So, the thick black lines, as you can see in on the slide, is the price movement of any trading instrument that you are going to trade. And the thin black lines actually is Fibonacci retracement, Fibonacci levels that are set up or put up on the price movement from one point to another point. From point A, the formation of these patterns starts from X point. Then market goes down and it's a downward tendency. From the point A, market makes the correction upwards. And the first wave of this pattern must finish at point B. It should be on the level 61.8 from Fibonacci retracement from the section or leg or segment, I will use all three words today, of XA. The segment BC, and the first wave of the pattern must finish in the point B. It's on the 61.8. The segment BC shows us that the market makes an attempt to recover in the direction of the trend. But intermediate low A stays the same, it doesn't change. So the point C must be around level 78.6 from AB movement, from AB leg of Fibonacci retracement. And the point D must be on 78.6 from the segment XA again. Now the important details. The key point of the pattern formation is that the equality of the segment ABCD. It's very important exactly at this pattern. The rest parameters can have some deviations, variations. For example, the correction AB can reach only 50%, not 61.8 as it was mentioned before. So we can move, market can move in different directions. And the segment CD can only reach 61.8, not 78.6, for example. But the ratio CD-AB is compulsory in any butterfly configurations. By the way, talking about configuration. So, butterfly pattern can be used in different configurations. And for example, we will show you the classical butterfly pattern which is bullish pattern. Recommended time frame is from M15 to daily. And as an example, we illustrate how this bullish pattern works on time frame M15. You will see on this slideshow the execution in the markets. Actually, it doesn't matter how the price goes. The only thing that matters is the proportions. So we will be actually very attentive in describing your proportions, and you please stay very attentive while listening it. So let's look at the trading signals on the example of the classical butterfly bullish pattern. What you can see at this slide, it's a classical bullish pattern of butterfly. The red lines show you the price movement. And in more details, point X is the beginning of pattern formation. The segment XA is one direction movement without strong retracements. This is an upward price movement, which is the base for the Fibonacci retracement. Segment AB is the first correction. B can be on the levels from the 50% to 61.8 of Fibonacci from XA. Segment BC is the rising of the price, and C point can be from the levels of 61.8 to 78.6 of the Fibonacci of the leg AB. Be attentive, it's not XA, it's AB leg. Segment CD is the second correction of the market movement of XA, the main movement. And it can be 1.5 times bigger than BC segment. Point D is the first possible buy entry point. So it can be from the levels 61.8 to 78.6 of the Fibonacci of XA. Listed pending order. In this case, it's the buy limit at this point. And actually, we will give you some different options how to enter the market. Option number 2. After the complete formation of the point D, because I will explain. Actually, on the example of this butterfly pattern, you can trade wherever from the point X to point D. Anytime you can open actually your trade, or you can trade after the complete formation of the D. So the second option of entering the market concerns this second way of trading. So you can set up the pending order. In this case, it would be buy stop at the trend line breakout. Where this trend line is supposed to be? The trend line is built on the highs of the CD segment. And also, I give you the option 2, how to enter the market. If you like to enter the market manually, you can do it. You can enter the live market, opening buy trade after the closing of the candle higher than the trend line, which is built on the highs of the segment CD. This is a classical, actually, more safer way for entering the markets. And stop loss. Stop loss is recommended to set up below the Fibonacci level of 78.6 from XA, from the main movement. And regarding take profit, the first target is point A, and then you continue to move on the Fibonacci levels, but to avoid your losses and to minimize your risk, I highly recommend you to use trailing stop. This is rather complicated, 3 options actually enter in the market, but it's often used while trading by Hartley. So we highly recommend you to choose the best one for you and trade with the help of it. And the second pattern that we are going to describe today is called crab. So it's also a harmonic pattern from the Hartley collection, and it looks like the butterfly. But comparing these 2 patterns, we can mention one very big and main difference. This is a relatively small range of the segment AB, which in crab pattern must be not higher than 61.8 of the Fibonacci from the length of the segment, main segment of XA. The best option will be from 38.2 to 50% of Fibonacci retracement. We will show you an example of the bearish graph pattern. Comparing with the first one from the bullish one, you see the actual main difference. So the main and the necessary condition for the formation of harmonic graph pattern will be the height of D point. It must be on the level of 161.8 of the segment XA. Fibonacci parameters for the other highs can be basically variable. For example, high C must be in the range of 38.2 to 88.6 of the segment AB. High B will be on the level 38.2 to 61.8 of the segment XA. And except for the previous condition about high D or point D, it also must depend on the segment BC. So the Fibonacci levels from the segment BC must be 224 and even higher. So this is the highest point at this harmonic pattern. And the rest conditions are the same as in butterfly patterns. So we are waiting for the actually the best option for us. We can use pending orders, buy stop, buy limit, or we can enter the market. In this case, it will be sell stop, sell limit because it's opposite pattern. And we can enter the market manually on the breakout of the trend line. Everything stays the same. Okay. And let us discuss the third harmonic pattern, which is called bat. So the bat. Actually, it looks like a butterfly. That's why we actually describe the butterfly patterns in the first way, because it's like basic. It's like when you know the basic, it's better for you, it's easier for you to know the details. So, the bat looks like the butterfly, and it's also a pattern of the correction and the trend continuation. It means that it appears on the chart when the trend is temporarily changes its direction into opposite, but soon it recovers and comes back to the previous one. How we define that? To illustrate how the pattern works, we will show you an example on the bullish band. As it was mentioned before, it looks like it's identical like butterfly, but it has certain legs, and actually it also has certain legs, which are segments XA, AB, BC, and CD. And in more details, XA, it's a bullish pattern, as you can see in the slide, as in this case, as in this example, and is formed when the price goes up, it actually goes up very fast from point X to point A, and this is the longest leg of this pattern. AB, it's a leg when the price changes its direction and makes the corrective move to 38.2 to 50% of the Fibonacci retracement from the XA segment. BC. This is the leg when the price changes its direction again and rises, reaching the level 38.2 to 88.6. From the length, be attentive, of AB, not XA in this case, AB. And CD, this is the most important leg in this formation. Actually, at that moment, you can open long position, which is buy. And the entry points. Define, according to your point of view, where the pattern completion of the point D will be. The best case scenario, it will be on the level of correction of the leg XA on 88.6 of Fibonacci. Set a buy limit at this point. Regarding stop loss, it must be below X point. Regarding take profits, you need to set up Fibonacci levels from the point A to the point D and plot your take profit on the level 6 to 1.8 upward from the point D, of course, as you can see on this slide. And actually that is it. So you can see that the patterns are really harmonic. The only thing is to follow the instructions and actually to follow all of the levels that were described in this webinar. They're easy to find, they're very visual, and find them on your charts and let them help you to take profits. From our side, we'll do our best to give you more and more details how to trade Forex. And by the way, we wish you only the successful trading and we wish you the high profits. It was CLIQ company. It was Olga. Stay in touch. Stay with us. We really appreciate it, guys. Thank you very much for your attention. Bye-bye.